Hello everyone, I'm Marty Pospisil. I hope you're all having a fantastic summer. The weather's been great. Hope you're watching the Olympics. Canadians are doing well. And I'm here for my August 2024 market update. So without further ado, I'm going to jump right into the stats today and bring you right up to date on the real estate market for Vancouver and the Greater Vancouver area. So let's jump right into my Greater Vancouver price table and what's been happening with the market for detached, attached townhomes, duplexes, and apartment condos. So let's look at what's happening with detached houses first. Year over year activity is actually up by 1%. Prices are up year over year by 2.1%, detached, Greater Vancouver, and just last month about 0.5%, 0.6%. Prices are holding pretty steady for houses. That's pretty standard for the summer. We're seeing jumping onto townhomes and half duplexes. Year over year activity is down by about 6.2% from this time last year. Prices are up 1.4% from this time last year, and last month we had a slight jump in prices at 1.2%. For apartment condos, we've got activity down year over year by 6.9%. Prices are about the same as they were this time last year, and we've got a 0.7% drop in pricing over the last month. So again, pretty steady month over the month, and we're seeing those prices stabilize over July, and that will continue throughout August. Okay, what's hot and what's not? Let's look at the various product. As my subscribers know, I look at the sales ratio, and all the sales ratio is the absorption rate of product into the market on a monthly basis. What percentage is selling every month? If less than 11% is selling, we're in a buyer's market. There's downward pressure on pricing. If we're between 12 and 20%, we're in a balanced market. Prices are pretty stable. It's not favoring the buyers or the sellers. But once we jump over that 21% sales ratio, we turn into what we call a seller's market, and there's upward pressure on pricing. So let's look at the various areas for detached houses. Vancouver West Side. Last month we were at a balanced 16%. This month, surprise, surprise, we're at 13%. Again, no surprise really there because of the quiet summer, July and August months. So we are indeed still in that balanced market. If we look at attached townhomes and condos for the West Side, last month we were at 23% in the seller's market. Now we're still in a seller's market, just above that plateau at 21%. So we are still indeed in a seller's market for condos and townhomes on the West Side. If we pop over into the downtown area for condos, townhomes, we were balanced at 15% last year. Last month. This month we're at 14%, so a slight cooling off downtown, still in balanced market territory. If we pop over to the east side for detached houses, last month we're at 19%, upper end of that balanced range. This month we're at 13%, so it has slowed down for houses on the east side. We're in balanced market territory. For condos and townhomes, pretty active on the east side. Last month we were at a crazy 28% sales ratio, and this month we are at 24%, still in a seller's market for condos and townhomes on the east side. So we're seeing that lower priced product, that entry level product, still quite busy in the seller's market. The upper echelon product and detached homes has quietened down into that balanced market territory. Many people, again, waiting for the rates to continue to drop. We'll get more into that shortly. So if we look at the sales ratio for the west side of Vancouver, we can see that activity is going to increase out of this balanced range like we had last year and in 2022. So that is going to happen. And that's the same with the east side. East side, we're actually out of that range already in condos and of course in townhomes, as we saw in that product category. If we're looking at BC region by region, we're all fluttering around here for the sales by the region. Roughly roughly similar for all the areas. Vancouver in the Lower Mainland being in the bottom category for number of sales, and those other areas a little bit higher for number of homes sold. So if we look at all of BC, for the sales ratio, there's the band for the balanced market. You can see there's that 2022 peak we had, and then last year, of course, we had end of the year that peak, and it has quietened down a little bit in that balanced market range throughout BC. So that's pretty standard on what's happening in the Lower Mainland and BC. If we look at our month-to-month variances for the Lower Mainland, just to look at the burbs, and we look at detached homes, month over month activity, sales ratios did increase in some of the outlying areas. Mission, Maple Ridge, Port Coquitlam, New Westminster, Ladner, Tsawwassen, Port Moody, and the North Shore had a slight increase in activity in homes. And if we look at attached, same argument. We're seeing that outer area in entry-level product, the attached strata product, having a slight increase in activity. So that's fairly common and consistent, what we've seen over the last couple of months. What's happening with prices? This is the big question I keep getting asked. So let's jump into that pricing analysis and forecast. Okay, so let's jump into that. Now, if we look at the overall average MLS price across BC, you can see that's that peak that we had in 2022. We're not quite back there in BC, but we certainly are there in the Lower Mainland. I'll show you that in this next graph. Here's the average price graph for houses, townhomes, and condos since 1977. And you can see if you draw a line from that peak in 2022, we are at even higher prices for detached homes, and that's the same for townhomes, and that is the same for condos. So as you can see, Greater Vancouver prices are back to the peak, and we have never seen higher prices than where we are at today. So we are at historically peak pricing in all product categories for Greater Vancouver. Now, if we look at region by region and we are looking at average price, you can see something crazy is happening up in the Kootenays, big peak and then a big drop, fairly consistent in the other areas. Northern BC has skyrocketed actually since the beginning of the year. That's interesting. Lower Mainland up and down and up and down, a little bit of a sawtooth there. And Greater Vancouver, the 5-year housing price index, that is a more normalized index of where the prices are. You can see for townhomes, houses, and condos, we're pretty consistently back at that peak that we saw in 2022. So that reinforces that average price graph that we saw before. And of course, prices have never been higher than they are today in Greater Vancouver. So forecasting, what's happening this fall? What's happening in the coming spring? These are the big questions I'm getting all the time. So let's jump a little bit into what are the drivers. We've got the market enhancers in green, market deterrents in red, and if it's transitioning from one to the other, we have orange. We had consumer confidence is kind of in that transitional phase. The buyers are getting ready to pounce. They're watching those rates come down. They're getting excited. Many of them are away right now for summer, and there's going to be a pent-up demand in September once the kids get back into school. So consumer confidence is ready to jump up. Inflation and the economy, well, we should kind of separate those because inflation's doing very well, but the economy, the outlook is a little bit dicey on what could happen. But overall, inflation, we'll get into that a little bit later as well, is within that 2 to 3% target range. And the cost of borrowing is starting to come down as we see that overnight rate fall with the Bank of Canada on its monthly announcements. So the best 5-year rate right now that we're looking at is about 4.59%, which is pretty good compared to last year. Inventory levels are still gradually increasing, but very slowly. Again, you're going to see that change in September. So we're in that transitional phase, consumer confidence, sticking with that Olympic theme. The buyers are on the starting blocks and they're ready to jump out come September and October. And we can see retail sales are still up. There doesn't seem to be anything tapering off there. Unemployment rate, now this is quite interesting if you look at it. BC is at 5.2% and actually dropped, whereas our federal rate of unemployment in Canada is increasing quite dramatically month to month. So that's a little bit of a concern when you're looking at the economy, and we have to be very careful because we do see inflation falling quickly. It seems to be behaving quite well, but we've got to be careful that trajectory doesn't continue. We don't want to hit 0% inflation because that announces other problems for us and could put our economy in trouble. So there's a whole bunch of watching going on with what's going on with unemployment, and of course the overnight rate, what the bank's doing. And all the economists are analyzing like crazy on what's happening now. From a rental point of view, we're about $3 a square foot for rentals. That varies, of course, municipality to municipality. But you can see in general, we had a drop earlier in the year. Now we're starting to see those rental rates climb back up. Again, part of consumer demand and the consumer confidence. When we're looking at starts under construction, we're seeing that start to increase. As of 2022, the under construction went up, and the demand, now remember we're only in August, we're still a little bit a ways from where we were last year across the board from Vancouver, Victoria, Kelowna, Abbotsford, and Nanaimo. But that will change as the year continues. And if we look at the MLS residential sales, there's that peak back in 2021. There's COVID, there's hyperinflation as that hit in about the spring of last year. And now we had that jump up and a little bit of steadying again. We're looking across BC. So, inflation. Now, this is one of the big factors that, of course, everyone's following. There's Tiff Macklem with the Bank of Canada. He's got that real estate market in his hands, and it's dropped again. It's down at 2.67%. That's good news. We're about in the middle of that range of happiness, I call it, for the Bank of Canada, and that brings the overnight target rate from their 25 basis points a few days ago to 4.5%. So that is immediately good news for variable rate mortgage holders because they're following that rate and they get a discount now from where we were last month, at least, not from where we were a year ago or a year and a half ago, but certainly the variable rate mortgage holders will feel a little bit of that pressure easing off. And if the bond market reacts with lower yields, then the fixed rates should follow. But it's not an immediate reaction from the fixed rates. It does depend on that bond market. Now, borrowers are getting excited with the continued rate drops. And we're going to talk about this a little bit more shortly, but those rate drops absolutely must continue. It's imperative to ward off that recessionary concern. So we'll go into that a little bit more. We're looking at the Consumer House Price Index, or Consumer Pricing Index, Freudian slip, which of course 40% or 25% of it is of the headline Consumer Price Index is indeed housing. So it is very dependent on housing and what's happening with housing. And we can see that that is behaving quite well. So Consumer Price Index, inflation is behaving very well. That's the band. I call it the Bank of Canada happiness band that we want to stay between. And we're certainly about the middle of that band right now. And that's good news. And that's why, of course, the Bank of Canada is lowering the rates. So let's compare this with our neighbors. Our inflation rate now is 2.67%. It was 2.87%, so that's a drop. And there's Jerome Powell. The Fed, the inflation rate is 2.97, a little higher, but it was 3.27, so that's also a nice drop from where we were. And our overnight rate is 4.5%, as I said earlier, and the U.S. overnight rate is 5.33%. But here's what I was saying earlier. The Bank of Canada and the Fed need to aggressively continue to drop the overnight rates in order to ward off a recession. Some say it's coming anyways, but how bad will it be will depend on how aggressively we get those rates down. And we certainly want to avoid inflation hitting 0%. Like it was in Japan. So everybody's kind of watching what's happening with those inflation rates, but all good news with respect to the cost of borrowing. Mortgage rates will continue to fall now at a steady pace. That's our variable rate. We can see dropping. The fixed rates might stay the same and might also start to drop. That forecast changes quite a bit as we see those changes in the Bank of Canada overnight rates. So good news for mortgage rates. There's the forecast for the variable and the fixed as we get towards the end of 2024. Not unexpected, that's good. Now, the buying power for today's cats. I like to look at how much does it cost to borrow $100,000 when you're buying $1 million, or when you're taking out $1 million mortgage, multiply it by that by 10 or 2 million by 20. It's kind of a nice factor I like to look at. So for a quick calculation, the parameters I use to borrow $100,000, the best 5-year rate that I can find today is 4.95%. You got a 25-year amortization and you're paying monthly. That brings the buying power at $560 to finance $100,000. That's good to know. That's a good figure to have when you're out there looking at properties. What's this going to cost? If I take $1 million out, well, it's going to be $5,600 a month, plus property taxes, etc. So I know what my costs are going to be based on today's rates. So that's the buying power for today's cats. Now, if we pop onto our next slide, let's look at the inventory levels. Again, our market is highly dependent on interest rates and inventory levels and consumer confidence, all these factors I like to look at. And if we look at what's happening for detached houses, west side, here's the inventory, that red line. It went from 643 homes for sale to 661. Not even 20 homes came on the market. And that's the same for the inventory levels west side for condos and townhomes. It went up slightly, 23 extra homes for sale. On the east side, it went from 565 to 571 for houses, and east side for condos, townhomes, it actually dipped from 640 homes for sale down to 615. So there's very little inventory for people to buy. Now, artificially or officially, that keeps prices strong and steady because the inventory and supply and demand will determine pricing. But it's also a factor of people acting in the market and coming onto the market. When there's not enough to look at, they don't want to put their home in the market to upgrade or downsize because it's just not enough to look at. So when those rates come down and the buyer demand is back and more people jump into the market to make that real estate move, we will see not only the demand increase, but we'll also see that inventory increase as well. So that's going to happen as soon as we get those buyers back in town and those rates maybe fall another 25 basis points. Active listings are climbing as of 2022 across BC, so that's interesting. And of course, if we look at the various areas, Vancouver Island, Thompson, Okanagan, Northern BC, Lower Mainland, and Kootenays, we can see overall generally the inventory is increasing. Now, what's next for pricing? Again, to summarize the factors, first of all, one of the things we'll look at, of course, is the number of home sales in British Columbia. We can see across BC in 2021, 22, 23, 24, and here's the forecast for 2025. The British Columbia Real Estate Association's forecasting quite a good jump for activity in 2025 throughout our different regions in BC, so that's good news. So again, looking at all those factors in my conclusion, the direct impactors of the market pricing are, of course, mortgage rates, inventory, and consumer confidence. So if we look at inflation, it's falling, falling, falling. That's a big check mark, but we don't want it to fall too far, too fast. That could be a red X. The Bank of Canada must continue to drop those rates, so that's good for borrowers. And the listing inventory will take off in September. That's when everybody lists, when they're back in town, kids are back in school, we'll see that inventory go up. So the mortgage rates will continue to drop alongside the Bank of Canada rate, variable rates immediately, fixed rates depending on how the bond market reacts. And the lower rates will lure more buyers back into the market, and they'll put their product in the market, which in turn means more sellers in the market, and that will start to heat things up. The pent-up summer demand will be released in September. So if the Bank of Canada does not aggressively continue cutting the overnight rate, we will enter a recession. That's what a lot of the economists are calling for. So it's time to bring it down. They're a little bit behind the 8 ball here. It should have been done quicker. And now that pendulum is swung to the other side, and we want to sort of stall out that falling inflation rate. So Bank of Canada is looking at all of this very closely. But September will be our next busiest window, with new inventory hitting the market and lots of waiting buyers who are really optimistic about the lower rates as they continue to fall through fall. So that's kind of where our summary is. Let's look at a fun page. That's called our Wall of Success at the back of the office. You pick a bottle of wine when we sell your home. We had lots of happy buyers over the last month, Kevin and Jackie. We had Ted and Carolyn, and oh boy, probably a dozen more over the last few weeks. So very, very exciting. We've got that market moving along quickly. And just a few days ago, I'm very excited to announce we had a very successful seniors downsizing seminar. So if you have any friends who are seniors, or you're a senior yourself and you're considering doing a downsize, that was our first event. It was very, very successful. We had a lot of people. We had a full house show up for that seniors downsizing seminar. Sorry, we got this crazy music playing here for that. Let me turn that volume down. We had lots of great food, charcuterie. We had special wines brought in from the Okanagan. And of course, we had Natalie, myself, and Jennifer talk about downsizing and what are those concerns many people have in the downsizing process. And we answered those, and we talked about what the process looks for, or what you could look for in the process. Super, super exciting. In fact, it was such a success. We're going to do another one November 21st at 6 p.m. Just pop onto our website. We got our registration there. And that, my friends, is our August 2024 market update. Get out there, enjoy that sunshine, watch the rest of the Olympics, having a ball watching those. Really proud of those Canadian athletes. You can watch this video on YouTube. You might already be watching it on YouTube, Facebook, or Instagram. And of course, we've got podcasts on all the various sites. Again, I'm Marty Pospisil. Have a wonderful, wonderful rest of the summer. And thank you very much for joining me.